Hello everybody, welcome to today's webinar, Connected Device Market Forecast, When, What, and Why. I'm Justin Sargent and I'll be hosting today's session. Today's webinar will be presented by TBR Devices Analyst Jack Narcotta and will share insights found in our Devices and Platforms benchmark. If you'd like to learn more about this report, please reach out to myself or Jack after the presentation. Now before we begin, there are a few items I'd like to cover. First, I will be recording today's session and posting it on our YouTube channel, TBR channel. We encourage you to visit this channel to watch this presentation or any of the previous webinars we've posted. Second, I will be following up with all of you via email with the previously mentioned recording link, as well as with the slides in today's webinar, so please be on the lookout for that tomorrow afternoon. Finally, we welcome questions on the material we're presenting today. Please send any questions you have to the Q&A function, and we will address as many as we can at the end of the presentation. With that, I'd like to hand this over to Jack.
Great, thanks so much, Justin, and thanks everyone for attending. Let's get started. Let's get right down to it. So, from our recently published 2Q15 Devices and Platforms benchmark, one of the emerging trends, one of the insights, kind of those aha moments that really jumped out to us was the very quickly rising and emerging opportunity in the wearables segment for more of a kind of a comprehensive view of how we look at the marketplace. That benchmark takes into account things like PCs, both notebooks, desktops, and workstations, as well as mobile devices, smartphones and tablets. And then this emerging segment that has really come to the forefront with the initial success of the Apple Watch, and kind of extrapolating or looking into our proverbial crystal ball, if you will, we really think this market is primed to be a tremendous accelerator, not only within its own segment, but kind of that proverb or the cliche, if you will, that rising tides tend to lift all ships. So we do think that this market, the wearables market in particular, is going to be a $50 billion market in terms of revenue by 2020. This is a huge boon, a huge opportunity for many of the vendors that we cover in our devices benchmark, about 12.5 vendors from Acer all the way down to ZTE. So when we're looking at markets that are largely experiencing periods of flattened growth, PC markets in particular, where a break-even year or a flat revenue trajectory year to year would be, at this point, kind of a winning situation. This is really an opportunity to offset some of that. But one of the catches here, and one of the things that we do have to preface some of this large, almost kind of unwieldy opportunity out there, is that as the wearables become more advanced, they're looking to disrupt the roles that PCs and mobile devices play. The more autonomous the devices get, the less PCs and mobile devices are used by certain segments. That's not to say that as soon as you put a smartwatch or some kind of fitness tracker or some kind of GPS-enabled device on your wrist that all of a sudden you stop using your smartphone or your notebook PC, but the amount of time, the frequency with which you engage with that device becomes a little less, and ultimately that will drive in some segments of the market fewer purchases. This is kind of echoing what we're seeing with certain segments of the smartphone market, with larger screen smartphones, particularly over in APAC, supplanting to some extent some of the PC refreshes that the vendors have traditionally become accustomed to, particularly as Windows upgrades and releases new versions. So wearables, it's a new segment, but it doesn't necessarily replace the existing devices that are there. At this point in their life cycle, they're more than peripherals, they're more than accessories, but they have yet to really present or create a compelling value for consumers. And the road to wearables, or the road to the wearables opportunity, gets a little even more convoluted and complex when you get into the enterprise. That's more tied into IoT. And some of the things going on there, we'll certainly talk about that. So these aren't necessarily one-off products. They're not going to promote, or we believe they're not going to promote growth or long-term engagement with the current set of wearables that are out there, because by and large they fulfill a niche need. The niche capabilities will likely be integrated into other devices and ultimately kind of bridges that gap to many different devices becoming meshed into kind of an overall connected ecosystem of devices. And I think this is important because what we're seeing as the winning strategies so far, being able to tie these devices together even through comparatively rudimentary apps is really of tremendous benefit. Garmin, Apple, kind of a groundswell of some of the crowd-funded campaigns from Pebble, companies like Move, M-O-O-V, are leading the charge through their apps and services. My colleague John Spooner, who some of you may know, is an avid reader of the magazine Outside Online, and in their September issue online, they ran through a number of wearables. They had the author try out 16 different wearables to find what they called the ultimate fitness tracker, the ultimate wearable for your exercise needs. This is obviously just one niche in the market, but I think there's some important talking points to be able to kind of validate some of the discussion here, in that of the 16 that he tried, he discarded 12 of them from his from the author's analysis. Why? Because they were singular, siloed products that didn't really have any meaningful connection to the devices they were tethered to, if they were even tethered to smartphones or tablets or PCs at all. Some of the metrics were frivolous. A lot of them were Me Too features, very much copycats of some of the market leaders out there. So the vendors that are leading, and I think this is one of the things that we'd like to drive home today, is that the vendors that are leading, they may be in very different neighborhoods in the wearables market, but overall the approaches are the same. They really know their customers. They're not trying to reinvent the wheel, but what they are doing is trying to smooth out how our figurative vehicle begins to roll down the road towards this opportunity. So what I'd like to start with is, how does TBR define wearable? I think that's probably among the best starting point for making sure that we're all clear and on the same page. So we consider wearables to enable smart clothing, eyewear, headgear, body-worn sensors, and this does cross over a little bit into what has typically been classified as the Internet of Things, and it is in some way, but for the purposes of our discussion today, I think it's more important to center on the thing and not necessarily on the Internet that's powering everything or connecting everything. We're going to take a look at, as far as our agenda today, we are going to be taking a look at the impact on the total addressable market, what's getting in the way of widespread adoption by users, and in tandem, what the revenue potential is for vendors, or the obstacles to some of that, or what we believe are the obstacles to some of that revenue. We're going to take a look at, based on our own research as well as some of the market trends, what consumers, enterprise users are actually waiting for in terms of kickstarting some of that adoption or implementation of technology or acceptance of services, what strategies are vendors deploying to reach into new markets, or better yet, further into markets in which they're already playing. And this is a key point that we'll discuss in a couple minutes here. What do the users expect? We've performed research in parallel with our own benchmark that looks at the overall market. We've done independent research of end users that show some really interesting trends for both consumer and commercial markets. And I think one of the questions we get most frequently is, where do device vendors start in this wearables discussion? It's such a broad market, it's such a fluid, and I venture to say such a chaotic market, that the question that we often get from our clients that are looking for research and analysis into the trends is, where do I start? From which point do I enter into this opportunity? How do I engage with customers? What types of strategies, both from a go-to-market or a product development strategy or a blend of the two, are not necessarily guarantees of success, but what are the proverbial hands on the rail telling you about the trends in consumer markets, by region, by customer segment, by price band? Where do I get started? So with that, let's take a look at where we see the wearable and connected device market headed. If you attended my webinar about 3 months ago about the overall connected device market, we know that that segment is really primed for explosive growth, and the wearables market is a huge component of that. So as we look out through 2020, particularly as demand catches up with the rapid pace of product development, we really think that wearables will continue to add to and not replace the established ecosystem of form factors. And I think this is important given the state of each of the three main global markets, because in PC and mobile, the growing prevalence of good enough devices has really robbed many vendors of the technical differentiators that have propelled growth, forcing vendors to rely on budget-priced devices that generate less revenue and profit. We are seeing, as of recently, some shifts to that with some of the new premium or the new the accentuation or the promotion of some very premium price bands, particularly as Apple narrows its focus to try and displacing some of the Windows PC vendors in the enterprise with the iPad Pro. There's some slowdowns that are happening in Apple's Mac business that the Windows PC OEMs believe exposes some of the gaps in Apple's armor in that regard, particularly at the premium notebook PC price band, the $1,200 and up. So there's some opportunity there. In mobile devices, the tablets cycle of incremental upgrades have really muted some customer demand, caused the tablet market to essentially devolve into a price war, particularly in APAC, where large screen smartphones are kind of cannibalizing some of the compact tablets that are out there. So here I think you could make a case for the iPad rising above this particular fray, especially as Apple leverages its partnership with IBM and certainly the release of the iPad Pro to really make some inroads into large enterprises, secure some enterprise tablet market share. But ultimately, I think restoring growth to this segment for Apple is really not a priority given how well the iPhone is performing. So in wearables, the Apple Watch, with about we estimate about $1.1 billion, so $1.1 billion in sales in revenue for Apple for the iPhone in its calendar 2Q15 results, clearly shows that the Apple Watch has effectively made or validated the wearables market, but it isn't yet the market leader in terms of mind share, even among its own customer base. So there's still that perception that no vendor has really yet found the right mix of software and services, has found that killer app or that killer use case that really drives widespread adoption outside of its own customer base. And then there's all these other devices that are out there, the Roku boxes, the compute sticks, the various different kinds of form factors for some of these alternative forms of computing. We're probably going to see a litany of those at CES in Las Vegas this coming January. So they're all playing important roles also, but what we really feel, what we believe is that the smartwatch, by extension the wearables opportunity, is the greater component of the overall connected devices market, primarily because it's so closely linked in its life cycle, both now and on its roadmap, to the mobile devices and PCs that consumers in particular, as well as a growing number of enterprises, use every single day. So what's everybody waiting for? It's kind of an interesting market. There's quite a bit of fluidity, a little bit of chaos. Certainly, we've outlined why the wearables market is primed for some explosive growth. So when we look at the timeline, a 5-year timeline, I think, is kind of irrelevant without some milestones along the way. So here's our take on what's happening over the next 48 to 60 months. Next calendar year, we think, prompted in part by the Apple Watch, we have some much clearer use cases, kind of answering the question of why the heck do I need these things? Why am I going to spend $100, $200, $300 or higher? What is it that I am going to be using this type of device for? So watches that might have seemed bulky or even superfluous now I think begin to make more sense in this range of time. There's less of a crowdfunding mentality, there's less weird products, if you will, but there's also more iterations from some of the established vendors. And then secondly, there's an influx of services. Companies like Move, which are on the fringes today with a $50 sensor that you can put in your shoe or in your pocket of your shorts or your pants as you're training at the gym. They're actually providing, through their apps that are connected to the sensors, providing some real-time analytics and feedback through the combination of their apps and sensors. So if you want better performance while you're running, the app through your headphones or through a notification on your wrist will tell you, well, why don't you try shortening your stride? Or if you want to improve your lap times in the pool, it'll tell you to perhaps lengthen or shorten your swim stroke in the pool. That kind of real-time feedback is becoming very, very valuable, but also sets the stage for some new innovations and some new product iterations that we think are going to begin in 2017. But even here, we still there's still the stigma of it being a peripheral device. It's still largely technology for technology's sake. There, aside from a few apps in regards to notification management, perhaps some two-way communication services with some of the LTE or the 3G-enabled watches out there, there really isn't a killer app that has truly emerged, and this is the year where vendors are really jockeying for position. So we think here that during this melee, there will continue to be some improvements, advancements, some innovation that ultimately, in 2018, that's when you really start to see some substantial gains in both market share, the total addressable market. So here you've got Android OEMs, particularly Samsung, really beginning to figure it out. The third or fourth or maybe even the fifth generation of the Apple Watch will ultimately mimic some of the success of the iPhone and really nail it particularly for Apple users. The innovation of the first and second generation devices in 2016 ultimately has kind of a trickle down effect into other wearables by 2018, and accelerated through some of the adoption and implementation of what we see with the professional sports leagues here in the U.S. And in fact, we're already seeing some of the signs of this, particularly in the NFL, where all the players this season are wearing RFID tags that give both speed and position on the field. So this is simple technology, but it does have a profound impact on the consumers watching the game, who then ultimately want that technology, but also for the fashion houses, for the brands, for the athletic equipment suppliers that consumers are very familiar with, a lot of these household names. It begins to ease some of the technology to gain some additional mind share with the consumer market, almost as if the sports that they watch every Sunday or every week or every day in the case of baseball or hockey, kind of a proof of concept for what the devices can do. It's not necessarily a foreign technology, it's just now more of a consumer-minded, more everyday application of a very kind of specific kind of a niche market. So after 2017, we think there's a 2-year run in which smartwatches and other wearables really do become more mainstream, and the ripple effect goes far beyond consumer markets. When the hardware and services platforms really begin to mature, then I think you get broader commercial adoption. And this is where vendors really begin to stake their own claims. The Samsungs of the world, perhaps Google will come out with something independently. What the consumers are looking for is not just choices, but strong choices. And this is what I mean by leaders not named Apple on this slide, that Apple seems to have the majority of the mind share for the market, but if you're not an iPhone customer, there's not really, or an iPhone user, there's not really a lot of value for the Apple Watch outside of it being a extra peripheral that gets attached to it. So the stronger roster of vendors, the more mature product and platform and services and software deployments that we have really begets some additional opportunity. What you start to get here are some really interesting things happening with location-based services, data mining for all kinds of different industries that are really appealing to commercial markets such as logistics, energy, retail, healthcare, and the list kind of goes on and on. But ultimately, the consumers are serving as the proving ground for this, and then the solutions kind of in reverse to what happened with mobile devices or IT, with the consumerization of IT. Now we begin to get commercial devices that are, or consumer devices that, for lack of a more elegant way to say it, kind of put on a shirt and tie. They come into the business having proven themselves in the consumer market, and then the applications begin to trickle in to the enterprise. So what do we think is holding it back? Why hasn't the wearables market just absolutely exploded onto the scene? You've got name brands all over the place with all kinds of devices, primetime advertising, celebrity endorsements, you name it. But ultimately, it's become kind of a chess match between the vendors and the customers. You have users, consumers in particular, are really waiting for vendors to solidify their strategies. They want to know, how am I going to use this device? When will I use it? What other tasks and services can it perform for me? We think this is a really important set of questions to ask, primarily because in the early stages of some of this market growth, you've got devices with ASPs that make it easy to get into the game, if you will. So a Fitbit device or kind of a rudimentary health or steps counter might be between $50 and $100, but anything more than that, what does it do besides the device that costs between $50 or $100? Why would I spend 2 or 3 times as much? That's a challenging question to answer, and that's causing a little bit of a stalemate in the marketplace at this point. TBR's research of the devices market also shows that consumers tend to choose a device that they need in the moment for a specific activity, and really do view PCs and smartphones as information and connectivity hubs of the computing experience. So what that means is that even if PC and mobile device vendors don't directly participate in the smartwatch or in the wearables market, that the influx of these devices ultimately creates opportunities for these companies to strengthen the role and appeal of their more traditional form factors. The challenge there, though, is that as PC and smartphone users' attention shifts to wearables and the things that it can do, then the revenue and profit growth from these traditional product segments will slow. So there we go with a kind of a financially minded stalemate there. So as the pieces continue to move around on the chessboard, it's very clear that we are working toward an end game that does, in theory anyway, mutually benefit both sides of the coin, both the customer and the vendor. But one of the challenges clearly that we're seeing is a miscommunication with some of the value propositions of the devices, some of the volume-centric plays that that vendors are looking to build both market and mind share are a little bit out of sync with what consumers are expecting, what users are expecting their devices to do based on what price threshold that they have in order to acquire the device. So what are these companies doing? What are companies doing that are gaining traction, that are gaining that mind share that's critical really to garnering some of the first mover advantages? With the pace of change in consumer markets really being much faster compared to that of commercial, I think this is really the biggest driver to change of vendors' go-to-market strategies. And it's not just about keeping up. In fact, it's never really been about that. But there are new ways to lead the race. The market is so fluid at this point that there isn't yet a clearly defined winning formula, such as leveraging manufacturing scale to keep costs down or to protect your gross margins, or perhaps using a very aggressive sales force to build up sales and volume. There's not that template that's yet been established. So what are vendors doing now? Well, they're cranking up the hype machine, especially given the success of the Apple Watch. And this is really, I think, as fertile and as risk-friendly ground as there has been in some time in the devices market. It's open to nearly all vendors that are willing to put the time and effort into getting into this market. And those with scale and manufacturing, large stables of intellectual property, developer chops, they really get those first mover advantages that are critically important to that initial wave of building some of that brand strength. What vendors are also doing is that they're amping up the consideration among those who are really ready to buy. They're looking for ways to potentially co-brand at a minimum, or optimally co-develop some of these products. A savvy strategy for partnerships, kind of taking a look at what the portfolio of not only the hardware but the software and the services that go into that really are dictating some of the acquisition strategies to ultimately backfill some of the technology or sales channels gaps that some of these vendors have that are looking to make a really big splash in the wearables market. And then finally, they're evangelizing their ecosystem of products and services. And this is really, I think, very similar to what was happening in the early days of PCs and the peripherals that were tied to them. Much like that market, we do believe that this will eventually fade, but it will be present nonetheless in the short term. I think one of the things to highlight here is that the primary devices today don't necessarily go away. For some users, they will, particularly as the capabilities of the wearable or the smartwatch market really begin to ramp up over the next couple of years. That one device may be enough for a small segment of the market, but for the bulk of the market, for the majority of the users that are out there, as the primary devices shift to become kind of a hub, the wearables will become a larger source of input, of notifications management, and overall computing device interaction. It's not a replacement for the majority of the market. It's not a replacement for PCs or smartphones, but it is a logical extension of their capabilities, with the catch being that vendor strategies need to account for how the devices are used, altering the user engagement with it, and what the ripple effect on that is for, do I need to buy a new PC? Do I really need to upgrade my smartphone? The life cycles, the purchasing cycles are already getting longer with each passing quarter. The wearables market, for as much of an opportunity as it does represent, there needs to be a degree of caution there for vendors to evaluate the ripple effect that it will have on their expected return or their expected refresh of some of the devices that consumers and eventually enterprises already own and use every day. So the changes here, I think, are really beginning to be positioned to allow vendors to take advantage of some of these greenfield opportunities that I talked about, that fertile, that risk-friendly ground in the wearables market, where really what we're seeing is kind of a very up and down market. You've got, at this point, based off of a small revenue base, just the infusion of Apple Watch into the marketplace propelled, by our estimates, the wearables market to grow nearly 1,400% year to year. That's obviously a huge uptick from a very small base, but it does show that some of the growth in the, or excuse me, some of the declines in the traditional form factors are really primed to be offset by some of the explosive growth. And this, again, kind of highlights some of the, not the capabilities, but the opportunities for vendors to get engaged and kind of hitch a ride on a very, very fast-moving, very steep and very positive trajectory of the marketplace. So again, it comes back to the rising tide lifting all ships. What else is happening is that component manufacturers such as Broadcom, Intel, Qualcomm, Samsung are really helping shape the next wave of connected devices. Intel's Curie module, Samsung's Arctic platform, the various different things that Qualcomm is doing. They're really kind of raising the bar for what the technology is capable of, but then in tandem, they're also helping raise consumer awareness and helping raise kind of consideration for this. So what we've got is new wearables and connected devices from lots of new vendors are helping garner a lot of consumer mind share, but they're also doing it on a cycle that is much more rapid than what's happening in the PC market. It is a cycle that I think mimics a lot what's going on in the mobile device market, a much shorter timeline of innovation and then the latest performance improvements. I think that gap will really close because of the nature of the wearables market allows more players as opposed to just a few dominant vendors in that particular space. And what else that vendors are looking for is that they're looking to engage with customers that they already have or markets in which they're also participating from new angles. This is a new way or wearables represents a new way for vendors to tackle a defined problem, and it really highlights some of the tremendous opportunity that we think exists here. Our own research that I mentioned earlier of the end user marketplace says that customers are willing to spend up to, or that they plan to, over the next 12 months, for customers that currently own a smartphone or a PC, they're budgeting an extra $300 for each user. So that's roughly about 15% of the users that we surveyed that own a PC or a smartphone, that then eventually translates into a pretty impressive or a pretty sizable opportunity for that particular line of business. So PCs and smartphones are certainly some of the core devices that are out there, but users are looking to broaden their engagement with their preferred vendor if they have it, but if not, they are looking to go kind of outside the ecosystem to get the technology and get the functionality that they're looking for, and vendors would, it would behoove vendors to move their strategies and shift their strategies to be able to capitalize on those particular opportunities. So I mentioned that they are going outside the ecosystem, and with wearables really widening the playing field, it really does make for some significant new opportunities by 2020, but the established vendors, kind of the big three in the PC market, as well as in the mobile device space, their total addressable market, their customer base is really inviting greater competition. We're seeing some old faces in new places, a global roster of very well-known brands, but relatively new entrants to this particular market space. Samsung is obviously very well known, but I think they're getting into it from a very unique position, one of the few companies that can kind of straddle that line between device manufacturer and component supplier. There's a plethora of smartwatches that are powered both by Google's Android and Samsung's in-house Tizen software, and has really established it as a leading vendor in this particular space in the market. We estimate that Samsung's wearables business approximately generates $700 million in revenue annually, which kind of gives you a good measuring stick about the $1.1 billion in revenue that Apple did in the second calendar quarter alone for the iWatch. We're also seeing from APAC companies like Huawei, Lenovo via the Motorola with the Moto 360, and Xiaomi, and I think what's behind this is the booming consumer economy over in China and the really strong demand for mobile devices that have created some very fertile ground for these companies to leverage their smartphone and their overall brand strength and begin to offer some of the initial devices like fitness trackers, step counters, some very entry-level devices, but ultimately beginning to steer some of the consumers of or current users of their smartphones and mobile devices into their growing wearables ecosystem. In the U.S., we have companies like Apple and Fitbit. Apple immediately assumed leadership of the wearable segment in 2Q15, the first quarter in which the watch was generally available. The sales success, despite what some of the analysts on Wall Street might tell you, really established Apple as the immediate and present not only market influencer but market leader. But then in contrast to that, we have a company like Fitbit with its fitness trackers, which hover near around $100, make them a really enticing gateway for consumers to get into wearables, to get that experience of what it's like to monitor your fitness, for some of the more higher-end devices in its portfolio to receive some degree of notifications from the smartphone that might be in your pocket, beginning to change some of the user habits, beginning to change the ways in which you engage with the information and the notifications that are happening all throughout the day. And then finally, it's the return of the GPS pioneer with Switzerland's Garmin. This company, I think, has really reinvented itself after smartphones unseated its automobile GPS units as the default navigation device. There's a broad portfolio now that Garmin has of both GPS and location-based software as well as hardware, but also has the brand recognition to be able to design a portfolio of devices that are really creating kind of that tweener device, bridging both some pretty hardcore fitness tracking, but also some very complex smartwatch-like tasks, such as text and email notification management. So an Apple Watch Lite, if you will, or a Fitbit Max. It's really carving out a nice sweet spot in that market in the $200 to $250 price range with some very robust devices that consumers are very comfortable wearing as they get off of their bikes from the morning ride and then walk into the office. So speaking of those users, it's clear that they're waiting for the devices. It's clear that vendors are beginning to formulate strategies to ultimately create opportunities across the entire market without really amplifying a large degree of risk. But what are their expectations? TBR isn't in the need business, NEED. We analyze the trends that might move customers in one direction or in several, depending on the market. But we do feel that there needs to be value creation from these devices that really goes beyond the brands and what the brands and the current set of technology has to offer. We're expecting, as we've discussed, that there's going to be notable acceleration in the market. But in the short term, that's to say in the next 6 to 12 months, there's 3 primary obstacles that we think will really generate some friction. And I think it's important to take a look at these. And what I'll do is actually complete each one with a recommended strategy that we feel will help vendors to overcome it. So niche use cases. Now, this is a huge problem for the market right now. What does the device do for me? I already know from our research that, or I already know as a consumer that I'm willing to spend this money, but how do I spend it? Help me spend this money, but I don't understand what it does for me. What value does having something that counts steps do for me if I'm not a fitness nut, right? So we think this is largely the state of the market for some time, as we've outlined a little earlier, but as new technology enters the market, particularly from Intel and some of the other ancillary tech from Samsung, that the use cases will broaden as the underlying technology makes it easier for a single device, a single wearable to perform multiple functions. So this is when the more autonomous devices, the devices that don't necessarily need to be tethered or tied up to either through Bluetooth or some other technology to a mobile device or to a PC to really get the full value out of that particular device that you might have on your head, on your wrist, on your body, or on your shoe. One of the other challenges is that the technology is way ahead of demand. The users are completely overwhelmed with the myriad new devices that are coming out, not only from established vendors, but from all the startups, from all the crowd-funded projects. It's a really, really chaotic market, and while the market is moving really, really fast, and we do expect it to do so over the next 5 years, it is a really exciting and in contrast, also a very challenging time for device vendors because trends are going to rise and then they're going to fade away. Consumer sentiment is going to reach a fever pitch and then cool off. Businesses engage, and then they ultimately begin to seek more proven solutions, more reference architectures and ROI, things of that nature. So I think it's important to look at the market from the perspective that it will be much like what happened in mobile devices, like the smartphone revolution with the introduction of the iPhone. Not growing as quickly, but still a significant opportunity and a just as significant disruptor to what's happening in the overall computing device marketplace. And then finally, kind of the hallmark of what's happening with this particular market is the lack of a killer app, right? We've got Apple Watch validating the smartwatch market ultimately by figuring out what TBR believes is the killer app, and that's notification management. But the problem is that if you're anything like me, old habits are really, really hard to break. I can't count how many times I've seen someone with a smartwatch or some other wearable that gives their notification management. You know that that the notification has come through, but the user will still pull out their smartphone, right? This is a new way of interacting with the digital world around us. So that's one of the challenges here, that we've got this technology, we've got these devices that are really driving a lot of it home, but they have yet to really stoke some of the demand to mirror what's happening with the mobile devices. And I think this is when you start talking about kind of a blended experience that really helps provide the consumers especially, and eventually commercial users, with a balance of independent, autonomous devices that are linked to or otherwise aware of, or perhaps even exchanging information with, the other devices that they have, whether it's the desktop PC at my job, whether it's the notebook PC on my living room table, or whether it's even something like the alarm clock in my bedroom, making sure that there's a mesh of connectivity that happens there that is not just for technology's sake, but really helps unlock some of the value that's out there. And actually, speaking of commercial markets, we do think that there will be a focus on IoT, but in a way that really begins to transition into what we define as IoT, which is primarily the number of devices in a commercial deployment, the data they generate. Ultimately, the value proposition here is that it does require vendors, or it does require a system to really reap the most benefits out of it. So what we're seeing here with the opportunity with wearables, much like what happened when we discussed this 3 months ago with the connected devices market, is that it's an opportunity to earn new customers, right? To begin to lay the groundwork for an ecosystem of devices, transforming that ecosystem into customer loyalty. And I think that begins to become apparent because what consumers' expectations are largely that all their devices are going to be connected. There's Android Auto, there's Apple, the initiatives that Apple has for the connected auto, for the connected home. So in the larger context of this particular opportunity, it's how does a commercial vendor, if they supply server storage networking, how does that infrastructure provide greater value of the devices that are connected to it? Does it make those devices easier to make the things that users are using them for every day? Is the device valuable, for example, in a workplace environment, helping me flow back and forth across tasks, not necessarily across devices, as painlessly as possible? That's a very important question for commercial-minded vendors to ask. And also, with that infrastructure for connected devices requiring those server storage, networking, software, security, cloud management really to function properly, I think it's an opportunity for many of the cloud providers, the telecoms, the operators, all this back-end infrastructure that even if you don't directly participate in the devices market, wearables is still going to impact your business. There's a need to, or there will be a need to extend the value of being connected across a diverse range of devices and services. I can't emphasize enough how important it is that users really want an environment, both in a professional and a personal standpoint, to be able to flow between the computing environments. What access can I get? This is what they're asking themselves. What access can I get to the resources I need, or how can the data I generate become a tool that might help streamline a business operations, help me move into new markets? What's the architecture that a commercial enterprise would need to implement that takes advantage of this and really capitalizes on it? Because what does it do? Because it allows value creation by these devices and services that really brings the commercial entities into new realms. The ability to monetize data generated and create new business models. This is a tremendous potential to transform the competitive landscape as it exists now. There's going to be new vendors here. GE Digital is an example. They've been advertising very heavily about how they're changing not just the machine language, but some of the language of business and how they can capitalize on the data that the millions of endpoints that GE devices touch every day. So these new vendors will ultimately be able to enter and really effectively compete more quickly than ever before. But for established vendors, it's also a tremendous opportunity to be able to build bridges into new markets or increase their fortifications, if you will, for their installed base, for the customers that are using their solutions today, what new ways can we engage with our customers? How can we help them move to the next step of becoming more efficient companies, becoming more streamlined such that for every dollar they put into the business, they extract more profit out of it. It's a very simple simple application in practice, but I think it does provide some value here, and I think this is really where the devices really begin to kind of drive home this perception of value, because it clearly shows you how to lower your operating costs, create, in the case of healthcare, maybe healthier patients, streamline your operations, or increase your work or increase your worker productivity. So in closing, let's recap some of the things or some of the highlights here that we've talked about. Device vendors are clearly beginning to lay the groundwork to position themselves in wearables markets. And again, we think this is going to be a significant and very additive to the existing market by 2020. $50 billion of a total $74 billion in new opportunities that are out there. And during that ramp, the important first mover advantages are really going to go to vendors that take advantage of their legacy proficiencies in product innovation, combined with some savvy go-to-market strategies or willingness to partner. And I think it's important to note here that we think the wearables is not just a device-centric business challenge. You know, how do you make the devices at a profit and then sell them en masse to a global customer base? But it's also a marketing and resource word problem, if you will, as well. That's some things to consider in that regard. And a winning strategy really, excuse me, in these new markets really anticipates some of the changes to not only consumers and ultimately commercial purchasing behaviors, but also the use cases too. Consumers, we think here, are going to lead the way, particularly with some of the new innovations that are coming out from some of the APAC smartphone vendors. So I would look to growth drivers for those seeking more of a volume-centric play. Look to what's happening and take cues from what's happening over in APAC. For profitability and brand strength, we can look to what is going to happen over the next 6, 12, 18 months in more mature markets such as the US and Europe. And why is this important? I think it's clear this is data from our 2Q15 devices benchmark. We have Mac PCs continuing to outperform the global PC business, the global Windows business. While Apple does remain insulated from most trends that are affecting the Windows PC marketplace, Mac PC revenue growth is beginning to slow as existing users upgrade their MacBooks and iMacs less frequently. So while this is creating some opportunities for PCs to displace Apple with devices like the Surface Book, the Surface Pro 4, Dell XPS, Lenovo Yoga, the HP EliteBook, and Spectre, this is kind of, we think, a relatively short-lived template that beyond 2016 really, while it might create some additional mind and market share here, there is a greater problem in the PC market to solve. Tablets, in terms of mobile devices, some of the elongated refresh cycles, the uninspiring iterative updates, particularly in the Android marketplace, and consumer sentiment beginning to shift to large screen smartphones have really squelched a lot of the demand for not only Android but for iOS tablets. Apple remains the juggernaut of this segment, and the release of the iPad Pro this past September does highlight how Apple seeks to expand the addressable market for iPad outside of a declining consumer base, and I think that's driving a lot of the changes there. In the land of smartphones, we've got strong iPhone revenue and unit shipment growth during what is typically a soft quarter for Apple, really highlighting some of the influence on its global market. The release of the 6S and 6S Plus models in September is already supplementing pretty steady demand for the previous version, so we look for Apple to have yet another record quarter in calendar 4Q15 and possibly even in 1Q16. And then there's the Android conundrum. So while in Android land, while year-to-year revenue declines are slowing, they're still declining, but they're slowing, the popularity of sub-$150 devices among consumers in APAC has continued to prime the region for flat revenue gains even as unit shipments climb. So it's kind of the innovator's dilemma, right? You've got these great devices at great price points, but it's not moving the revenue needle no matter how many of the new devices you are shipping. And the final point here is that I'll make before we segue into the Q&A is that in July of this year, Microsoft announced it was laying off about 8,000 employees, effectively ending its participation in the consumer smartphone marketplace. But we do believe that there is a great chance that Microsoft will ultimately reposition or repurpose Windows Phone as an enterprise device, leaning on some of the things and some of the best practices that it's learned from its PC. So Windows Phone, not necessarily as a consumer play, but as a business phone, perhaps even through something like a Surface phone that in the short term would look to supplant companies like BlackBerry, but in the long term, with the overall value proposition of Windows 10, relying on features like Continuum and some of the more PC-like capabilities that would be built into that device, really highlighting and capitalizing on some of the demand for users to be able to pretty seamlessly go back and forth from not only application to application, but from location to location or form factor to form factor in the workplace. And with that, I'd like to thank you all for attending, and we will turn it over now to Justin for our Q&A.
All right, thanks, Jack. And just a reminder, everybody, so we do welcome questions. Please send any questions you have to the Q&A. We have a few minutes here, so we'll try to address as many as we can. So, all right, first question. Will Apple scale in the market force vendor consolidation in wearables or other connected device markets in order for them to adequately compete?
Yeah, that's a really great question, because I think it speaks to when you've got a juggernaut like Apple in the marketplace that has a seemingly endless supply of resources, both financial and human, that it can throw at a problem or that it can look to influence in the marketplace. I don't think we'll see consolidation on the degree that we might have seen in a more defined market. I think some of the fluidity that's in the wearables market today really begins to beget some of the smaller vendors opportunities to be able to move around and establish their own niche in the marketplace. So while Apple will certainly have some of the heft in the marketplace, and you can also put companies like Samsung and even to a lesser degree some of the component manufacturers in that marketplace also, there will be opportunities for niche use cases to really gain some traction, particularly in vertical markets such as healthcare or in fitness or in retail, where Apple does not yet, emphasis on yet, have a presence on par that it does in the kind of the general purpose mobile device marketplace, especially in consumer markets.
All right, our next question. Although PC, specifically desktop, revenue is dropping, do you think traditional PCs as an end-user solution is sustainable in the long term?
Yes, I think it is, because of the, just from my own personal experience here, I think it's a great opportunity as kind of at the center of all the other devices that are connected to it. So what I mean by that is as a storage medium, as a very detail-oriented communicator and content creator. And what I mean by that is communications with friends, family, coworkers. The need for a keyboard in some of our research is really paramount to kind of the computing experience, the overall computing experience. And the tasks that our research has found, what PC users or what computing device users do most frequently really benefits from having a keyboard. And this is very detailed communication, being able to type out a quick message to friends, family, or coworkers, beginning to search online for retail goods and services that on a mobile device or, and certainly not on a wearable device at this point. Just imagine trying to fill out a shopping form online on Amazon.com on
on a smaller screen smartphone, never mind something you wear on your wrist. There's very much a place for the traditional PC in this market, but the growth in the overall IT or computing devices marketplace is going to come from new devices. And I think actually a little bit it's the PC industry in some way has kind of created a little bit of its own problem in that the longevity that these devices have now is really prolonging some of the refreshes and some of the additional purchases. So while we might not see as much revenue and profit opportunity from the manufacture and sale of PCs, they still very, very much have a place in not only in the home, but certainly in the professional market as well.
All right, I think we have time for one last question here before the top of the hour.
Sure.
What role or roles will Intel, Samsung, Broadcom, etc. have in wearables and connected devices? And do you see chip companies such as Intel and Broadcom releasing their own products to scale it?
So let's take the latter part of that question. I do see Intel and Broadcom at least testing the market with their own devices, more as kind of a concept car, proof of concept that their technology works. They'll make it commercially available, and if they are able to garner any kind of traction with consumers or in commercial markets, then that's certainly a benefit for them, but it's never really been part of their core business. But I think it is important for them to showcase, almost as a marketing tool, what their technology is capable of. So the rest of the question, or the former part of the question, I think it's important that those companies really begin to drive the innovation in the market. What is happening there is really, this is why I called it Moore's Law remixed, is that there will be that in the classic Intel fashion, there's kind of a tick-tock functionality where you've got significant performance upgrades, be it in displays or battery life or processing capabilities, and then we get improvements on a more incremental or an iterative update to that. So their roles will largely be as, not bystanders in the marketplace, but kind of the literal infrastructure that powers a lot of the devices that we're all going to be wearing or interacting with while we drive every day, or that we're going to be engaging with while we shop or work. It's really on those companies to make sure that that the revenue opportunity that I've outlined really comes to fruition, because it does, in a large part, rely on some of the advancements that they make, both from a chipset and a battery life perspective. I think those are probably the two greatest areas that those companies will really focus on.
All right, and that brings us to the top of the hour, so that's all we have time for. I'd like to thank Jack for your time today, and thank you everyone for your attendance and your questions. You can follow Jack as well as TBR on Twitter on the handles listed here, and please check out our pages on SlideShare and YouTube for our previously aired webinars. Before you sign off, I'd like to ask you to take a brief survey about today's webinar. We're always looking to improve the information we provide as well as how we provide it to you, so your feedback would be greatly appreciated. We'll leave the chat function open for another minute or so for people to send in any last-minute questions. Otherwise, thanks for attending, and have a great afternoon.